All right, welcome back to Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy. Thank you very much for joining us. If you're just joining us, and if you've been with us all day, it's my job to make you stay. That rhymes for a reason, to make you remember it. How about that? Let's look at the markets, because who cares what I have to say, but we want to see what these markets are doing. Let's bring up corn. These markets are your money, and this is important. So we're up 7 cents in that July contract to 820.5. Only about 4 cents off the highs there, so let's keep an eye on that. That's interesting. You go out the deferreds, we're still up 5.25 cents in that March contract. 7.59 is last. We're 10 cents off the lows and about 11 cents off the highs. Kind of mid-level in the day's trade there. Okay, soybeans. Let's take a look at what we've got happening there. Well, we're up a dime, 10.25 cents in that July contract to 16.95 even. While we've got November, that's the new crop beans, up 5.25 cents to 15.26 Not bad. All right, let's take a look at the wheat. I suggest you turn your head if you don't want to see a lower board. 19.5 cents lower in that July contract in Chicago. 10.66 is last. About 5 cents off the lows, so kind of flirting with danger there, but not too bad. March is off 14.25 cents at 10.68. How about hard red wheat in Kansas City? Hard red in Kansas City, here we come. 26.25 cents lower to 11.15 even, 3 cents off the lows. This one's flirting with a little danger to the downside. And we've got December off 23 cents to 11.20 even, and that's 4.75 cents off the lows. So let's see what spring wheat's got for us here. Anything different? Probably not. Nope. 17.75 cents lower in that July. All the wheat contracts are lower today. 11.73 is last in that July contract. We've got March off 13 cents to 11.56 The one that's going to be pulling up the rear here is going to be that cotton contract. Sorry, rice. 55 points higher at 148.23, but that has backed off a bit. Let's bring in our next guest analyst. It's going to be Todd Horwitz with Bubba Trading. Todd, thanks for spending the time with us on a Friday here. Last day of the month. Yeah. What are your thoughts?
My thoughts are it's ugly. I think today is a very orderly selling day. I think if you look at, there's not many places to hide. You look at the equities, they're just drifting lower. The volatility is down, which is interesting. So to me, this is an orderly sell-off. And I think the grain markets are holding up pretty well based on, I think we're just seeing kind of wholesale selling, but not any panic. So this is more directed into the equity markets. You look at the interest rates, Scott. I mean, they just keep going higher, and the Fed's going to be forced to raise. This is not turning out to be a very good scenario when it gets all said and done. And shut down the supply chain somewhere with China. This is not playing out very well. It'll be great for grains and things like that. But I think overall it's going to be an ugly economy for a while.
Well, I mean, everybody's trying to explain away that negative GDP number we got yesterday, but I don't think you can. I really don't. I mean, I would have thought if we got that 1.1% we were looking for, that would still have been bad, right? I would have used the government's excuses for the negative 1.4 for the 1.1 positive one. So we got surprised, Todd, and I think that's probably more of that sneaking into these markets here today, because if you think about it, if we slip into a recession and that consumer starts to get hurt more than they are even now, that could really put a dent into some of the things that we purchase in the commodities on a daily basis.
Without doubt. I mean, this is a very serious time, and we need some very serious action, but it doesn't seem like we're going to get it. And this is the overall problem, because a lot of these tariffs and extra costs are really self-imposed. And I think, you talk about, taxation without representation, and this is really what we're getting, because that's what inflation actually is anyways. But it's so much higher than they're willing to tell us that it is. And again, I could make the argument, Scott, we're already in a recession, and it doesn't look well.
That's taking a line out of my book there. All right, stay right there. We're going to go away. We're going to pay some bills. We'll come back and talk livestock with Todd Horwitz from Bubba Trading, and he's in Chicago after this. All right, welcome back to Market Day Report. Getting to the top of the hour here. I'm Scott Shelby, otherwise known as the Cow Guy. Thank you very much for tuning in. All right, let's get right to these cattle numbers. Let's see what the live cattle got for us. The Cow Guy is going to be a great segue, a cheap segue, actually. You're looking at live cattle. June is down 95 cents to 132.95, 45 cents off the lows. We haven't had that much of a range over there today, but still, that's going to be something that we're going to keep an eye on. 55 cents lower in that D's contract, 148.35, and that 55 cents lower is known as double nickels on the floor of the exchange. All right, how about feeder cattle? What do we have happening over in feeders? Well, they're having to deal with a higher corn board, and the answer is they're not dealing with it very well. We've got August off $1.92 to 168.47, and we've got September off 195 right behind it. But if you go out to Nove, that's off $2.02 to 175.70. So kind of a negative board there when we talk about feeders. but that's understandable with a higher corn board. This one is hurting a little bit, right? We've got June hogs, lean hogs. They're off $4.12 to 106.85. And even going out to the defers, where you might get a little respite, we don't really. $2.37 lower. And that October contract, that lean hog October contract last is 94.75. All right, let's bring in our guest analyst. He's still waiting in the wings. He's in Chicago. His name is Todd Horwitz. All right, Todd, any different ideas when it comes to lean hogs or livestock or the cattle?
Well, Scott, I think, again, take a look at oil today, $108. Okay, so, we had the sell-off, which actually helped propel the protein a little bit higher, and now we're seeing a big rally. And again, this is going to come to a budget. It's going to come back to a budget issue, to people, what they can buy and what they can afford, and what can be delivered to the store. This is the other problem is, again, we can't get delivery. We can't get goods in the stores. There's empty shelves everywhere. So this is all lining up to be an ugly mess. And as I believe that the higher crude goes, the lower cattle is going to go, which brings hogs into play to be stronger. But they're pretty highly priced here, at $1.06 or $1.10 anyways. So it's not a surprise that they got to $1.18 and came back a little bit. We'll see where they go from here. But I think hogs will go higher or stabilize. But cattle is going to be very volatile based on, I think, what oil does.
Yeah, I mean, you're right. And this economy is going to hurt for a while. And to your point about the shelves, 3 months ago, it was how long is it going to take to restock them? With these supply chain disruptions, which are arguably worse than they were 3 months ago, the question now is, are they going to be restocked? I mean, that's what we're facing here. So I really appreciate you coming on the show. Great point to bring that up.
Thanks.
That's Todd Horwitz. He's with Bubba Trading in Chicago. We'll bring it back to Nashville so I can throw this over to Suzanne.